Good morning, everybody. Welcome to today's live stream. Let's dive right into it, shall we? Let's record the idea, and let's talk about extreme values today, as in what people typically refer to as overbought and oversold. So, we are technically in a trending market. It just depends on what time frame you're looking at, because there are some very conflicting signals just based on the actual expansion and compression in and of itself, right? Since if we were to say look at the weekly chart, weekly compression is a very real monster and something we need to talk about. So we're going to load up the BLX ticker to begin with. Beautiful. And let's just switch to logarithmic. It's going to look like a pony for a second. 1 second, almost there. Just beautiful. It's bullish. Okay. Now that that can't get out of your mind, let's talk about compression. And wave PM values might be of use here. So, markets are typically very cyclical, where we have extreme periods of compression and then extreme periods of trend, especially in cryptocurrency. In, say, Forex, you have a lot more of a ranging market, and even, say, in stocks and securities, you get a lot of these same periods of trending and compression. And as far as Bitcoin goes, well, it does so in a very volatile manner, to say the very least. So, with this in mind, we have our previous crash pattern right here and our current crash pattern right here, right? So what happened in between with its relative wave PM readings? We see all these high mass readings right here, right? And as long as they're in a downward trend, price typically goes sideways, right? And by looking at our mass readings, we can actually literally have a picture painted for us that shows what exactly, or rather where exactly we are in the market cycle, right? Since if we have our large generation of mass through this upward trend in the past, well, it needs to go into a state of compression, which is defined by all these decreasing wave PM values. And of course, that looks like blue and green across the board. And nice, all this beautiful lateral trading. This beautiful compression here. And, you know, when I say lateral trading, from the looks of it, price still rose 122% from the bottom. And, you know, my prediction, or rather my case for when you should go long on Bitcoin a few months back was you want to go long on Bitcoin one of two scenarios. When either we have tested the weekly 200, or if we have a sustained upward move above the weekly 50 moving average. So, with this in mind, well, I do suppose we need to consider this a sustained upward move above the weekly 50, don't we? Since it is significant enough, we have gone up, what, 20% in just the single candle? It has been explosive, to say the least. And, well, our worst case scenario has come true. A sustained bullish upward move above the weekly 50. And that's really bad because, well, we shorted from the weekly 50. Okay? Right, so we took our shorts and we have stopped out of our shorts. Right? And I think one important thing to understand is if you're wrong a little or if you're wrong a lot, you still lose the same amount of money, right? Well, it all boils down to risk management, right? If you attempt to short from this location and price were to wick up and then go its way, you would have lost the same as if price started a verifiable trend to the upside, right? Because your stop loss has been the same. You would have exited the trade and price would have run off without you. And I think for the critics out there, I do have one important thing I'd like to point out. Since, criticism has been abound now that price has started a verifiable upward trend. So I would like to propose 2 questions. Let's get those weekly MAs anywhere loaded up. Did you take the 2 longs here and here? And did you take the short here? Okay? Here's the thing, guys. Here's the thing about profit ratios. When you take a long, I actually exited my long position here, the leveraged long position, that is. Well, actually, if I'm being honest, this long entry didn't fill for me. I missed out on my long entry there. But I did long from this location. And I actually exited it around this location. Yes, I know. I had a static take profit target, and it kind of screwed me over. Always use trailing stop losses to take you out of the market. Never use static limit orders. For exactly this reason. If you're in a winning position, don't take yourself out of it. Let the market take you out. That's very important. Anyway, okay. So what would have happened, right? Where I called the bottom for Bitcoin. You can go in the YouTube history channel, or the YouTube channel's history, and just look at the video titled "Today I'm Calling Bitcoin's Bottom." Bitcoin's bottom is here, something like that, right? On one of the videos, there's this beautiful comment that says, "Buy my bags," expletive, and well, I deleted it. And I kind of wish I didn't, because I very much like to reply that we did, in fact, call the bottom on Bitcoin. Now, what if I had not done this correctly? What if I had called the bottom and price continued to trend downwards? What would have happened then? I would have lost 3 to 5% on a trade. Goodness gracious. So my profit ratio is 6 to 1. I'm very happy with that. So now we look at this location. We enter a short here, right? It starts to go in our favor. We're up 5%. Oh, but then we stop out. We lose 5% on that trade. Okay. Right? We actually started to get a little bit of a move. And then at first I think, hey, quite possible that this is a fake out. We still have all this compression. It's still a bearish chart. We still have active mean reversion conditions on lower time frames. And then something bizarre happened. We got a second higher high, right? Because we entered another short entry at this location. And then, well, price went up again. And this time we stopped out of another 3%. So my question is, let's actually look at this in the lower time frame. Let's take a look at this on the 4-hour chart even. Okay? So if we know that based on Bitcoin's previous fractal, its previous behavior, that the market ended in the last crash pattern, or either the market bottom was found in the last crash pattern directly on top of the weekly 200, and it bounced off of that level, right? And then what if in the previous crash pattern, the exact retracement value for that bounce was exactly the 50 moving average? Okay, so if we're playing each crash pattern based on the same institutional benchmarks side by side, exactly correct, why would at this location, for the first time in a year and a half, why at this location would price suddenly decide to diverge and no longer follow the old crash pattern? Right? It's just probability. if you have an idea, or rather, if you have a, let's use the word bias, right? If you have a bias that the market is going to do a certain thing because you have historical evidence that up to this point it has followed play by play the exact same fractal, is it logical to bet against it? For me, it wasn't. It didn't match my risk profile to short, or rather to take longs above the weekly 50 at this time, right? We saw this fake out, we saw the mean inversion pivot crossed, and we saw huge bearish confirmation, the largest sell-off in hell in the last few months since the crash down from 6,000, right? So we had bearish confirmation. And then, well, price goes up and we see this. Okay, let's point out where we made our next shorts. We took a short here and here, and we haven't called any since, right? Because we stopped out of it once, we stopped out of it twice. Beautiful. That's fine. Risk management. Okay? Now, let's put it like this. Where on this aggressive parabola is a safe short, where on this aggressive parabola is a safe long entry? If you see price rapidly accelerating to the upside and repeatedly tagging extreme values, right? In our case, the 53.2 standard deviation. If we're repeatedly tagging those values, well, you have significant volatility overhead. What would be the best way to bet that this is the moment everything is going to change? This is the moment where the fractal is going to diverge for the first time in 1.5 years, right? It's all about risk. For my Binance portfolio, I took my portfolio into Tether around this location. Somewhere in that circle, I'm not going to be specific. So, around this time, I took my portfolio in Tether. Now, just point on this chart. Where would have been a good location for me to buy back in? Here? 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 I don't know. Maybe I should finally buy back in now that we're tagging the most extreme value in a large overexpanded band. Right, guys? Here's the thing. When you have excessive mass, it doesn't necessarily mean something won't happen. Compression is more probable than continuous expansion. If you have a tow truck sitting on an edge of a hill and somebody gives a little push and it starts falling down the hill rapidly, what are you going to bet on? Are you going to bet that it's going to reach the bottom of the hill? Or are you going to bet that Hercules is going to materialize in the middle of the hill, stop the car while it's accelerating down the hill, and then manage to push it back up to the top? Which one is more probable? The first answer. So that brings me to the next point. If you have something that is maybe slightly more probable than something else happening, bet on the thing that's more probable. So what happened at this location? Hercules materialized in the middle of the hill and applied excessive increasing force on the car that's rolling down the hill, and he pushed it back up to the top. Okay? The alternative was more probable, but it doesn't mean the improbable can't happen. And that's why we use risk management. We saw an increasing huge parabola that smashed through every resistance value we had. That's not something logical to bet on. You don't bet on outliers. You bet on what has consistently happened in the past. And then when the outlier does arrive, well, you wash your hands of it. And you wait for the next period of market activity that is tradable for your strategy. Okay? So, That's pretty much all I have to say. Hercules is a very obvious analogy for institutional investors. Right? A demigod with incredible strength that can push the market to his whims. Right? You don't bet on his intervention when it's not probable to do so. Okay. That's all I have to say for this trading view idea. Hopefully it was informative. Oh, actually, I need to give my current Bitcoin prediction, don't I? Sure. Let's talk about the actual title of the video. The extreme values of the 3.2 standard deviation, okay? Notably, let's take a look at every location. I got 5 minutes, we can do this. Where price tagged the 53.2 standard deviation while it had a mass reading above the 0.7 value. It should be interesting. Okay? So, here's something important to know. If we tag extreme values, like here, when we're currently in a state of compression, where we are compressed, right? Look at how thin the band is here. And let's free up the chart space a bit. Okay. So, you see how the 50 band is so tight at this location? Right, so when we tag the 3.2 standard deviation, it's not a brick wall because it would not require all that much force to cause its expansion. And lo and behold, it expands. Right? Same at this location. When you're tagging extreme values from a place of compression, it implies trend. Right? That's why we got this huge oversold signal right here. Right? This was the most oversold Bitcoin had been all year. But it doesn't mean it's oversold. It means that we're in a severe place of expansion due to the level of compression. Okay? So what happens if you have already been in a state of expansion where you already have wide bands, and then you tag an extreme value? Aha! That is going to be when it's okay to bet on extreme values. So at this location, where we tagged the 3.2 standard deviation in the weekly 50 at the same time, that was clean. That right there was a good short entry. And I can actually show this pretty well on any Forex chart. Let's just do GBP USD on the daily chart. Okay? Every time we're in a state of expansion, and we tag the 3.2 standard deviation, we actually called that short right there. We called that. That was a great short. Right? Every time we tag these extreme values, there is a very immediate reversal. Now, when there is a state of true expansion, like here, do you see this wave PM cross? Where everything is expanding in the same direction? That would not be a signal. But if you have choppy readings, compression occurring like so, then it becomes okay to take those. And for the sake of sanity, I do recommend a red candle close inside the 3.2 standard deviation instead of just selling when it tags it, because otherwise you're going to get stopped out, right? But as far as actual brick walls go, this one's pretty effective. Okay? If we actually bet, if we attempt to short the 3.2 standard deviation, you want to be sure a trend ends first, guys. You don't want to short now, because then you're just betting against trend. It will be okay. Let's actually zoom in on this just so I can explain what I mean. Okay. So, Bitcoin, right, we have this exponential move here. We don't sell when it tags the 3.2 standard deviation. We sell when there's bearish confirmation with a red candle close after the after the rejection, okay? So, in other words, do nothing, sit and wait. Because currently, at this time, you don't want to bet against trend. It's still possible that there's higher volatility pops. Volume is still increasing, trend, the direction of the parabola is increasing. However, when we actually see this come up and pop down with a red candle, Oh, that'll be much more viable for actually entering a short. So, no opinion today. We're just going to sit and wait. Do not bet against trend. We had active mean reversion conditions on the 4-hour chart when we attempted to short here and here, so that was viable. But now that the parabola has actually accelerated, stay away. Don't attempt to short it until you get bearish confirmation. Thank you, TradingView. You have a beautiful day. Nice. That was fun. I still fantasize about having my long order fill right here. We're at 33.12. My buying was 32.50. Yeah, I took a long time to actually get to my prediction, but there it is. Okay. Show ADA daily chart and look where it bounced daily 200. Let's go ahead and check it out. Sakurai says it's because too many people found out that fractal history and whales thought they can trick everyone and start the bull run. You know, I'm concerned about the amount of compression. Curva, I know you're talking about this 200 containment zone pivot here. This value, but it's pretty arbitrary and it's not a hard pivot. Really, the only reason I use the 50 and the 200 is for their slope, because they're pretty good trend identifiers. Please look at ETC, BTC. Actually, you know, we have a lot of mean reversion pivots here, and we're still miles away from them. So let's actually look at a shorter time frame, because on the daily, it's actually mixing the mass readings from the uptrend and the downtrend. Okay, so active downtrends that cause the re-expansion of previously longest overexpanded periods that have already reverted to their mean. You get really crappy mass readings, and we can just visualize it with the 200 band here. Let's just assume the 200 is the longest overexpanded period, right? And that's arbitrary. If we have this period of expansion, you do not expect it to enter another state of expansion until it has sufficiently compressed, unless, of course, there is an unrealistic amount of force to continue pushing price, like we're seeing here. Seth says, if you look at the monthly chart, the fractal is still play to play. From the bottom to the top was 150% move to test previously monthly high. I assume we're doing the same currently. Yeah. Let's talk about the fractal for a second. Because what's thrown me off is we didn't have a retest of the weekly 50. We just straight out went for it on. Let me show you here. Yeah, it's just too bizarre. Okay, well, let me show you why this is so weird for me. Like, these readings of force are just so bizarre. Okay. So, because we're in logarithmic, we're getting these really weird extreme readings on the bottom, but we're actually going to use those to exaggerate the expansion and compression. Okay? So when we had the lateral move, it resulted in decompression of our distributions. Right? We had our lateral move, it resulted in decompression of the distributions. So after that compression happened, there was another state of expansion through the downtrend, and again, another state of expansion through the downtrend, which resulted in the expansion of our midterm distributions, like so. And then now we're seeing the same aggressive slope of compression right through here, where we retested the weekly 50 moving average. And we're seeing that same bout of compression right here, where we retested the weekly 50 moving average. So, same Hercules analogy. If we wanted to re-expand these previous high values, it's simply not logical to believe that we're going to see another aggressive re-expansion before we finished our period of compression. Like, watch. So when we tested the weekly 50 here in our state of compression, like so, how long did it take for it to actually return to a state of true expansion? All right, so let's just do it from where it's compressing, right around here. It didn't start a true state of expansion for another 300 days. So I really don't believe we're going to see another state of expansion for quite some time. And for some bizarre reason, this fractal is playing out faster than the previous one. Probably due to increased interest. But I honestly believed we would get a longer period of compression down here. But alas. Live and learn. We're just still seeing this compression. Price is going to compress around price. I don't know. Expect it. I keep on saying this, and I'm going to sound like a broken record. But it's just not probable for the bull run to start now, because it would require too much force. When does the Bitcoin ETF come out? Because when the gold ETF came out, that did wonders for price, so it's just like a few weeks, isn't it? Hey, man. And you know what? Let's talk about our worst case scenario. Let's say I'm completely and totally wrong, and we actually see increased, more upward expansion here. What happens then? Okay, then we're in a bull run. And if we're in a bull run, well, then even an idiot can make money. And if that's the case, well, we'll make money. Yeah, Big Blue asks, it was also not probable to trend above the weekly 50, right? No, it wasn't. Right, because we had this just play out the exact same side-by-side. Retest the weekly 50 below, rejection, touch the weekly 200, and then the beginning of trend. We're seeing that same move, just above the weekly 50 now. It's just improbable. If we look at XRP BTC, yeah, its mean reversion pivot's going to be miles away. I'm just going to warn you. Oh my god. Okay, so the mean reversion pivot's almost 200. So let's just make the 200 visible. For me to consider XRP in an uptrend, it needs to go above this line. Yeah, that's miles away. Oh, you know what we can do actually? 14 period CCI roll. That actually worked out pretty well. I actually have an alarm set for it. Yeah, if we get a 14 period CCI roll on the weekly, that would be a pretty good way of assuming swing high. Or swing low, excuse me. Yeah, so that signal fires, I'll probably call along and we'll see what happens. Red Pill asks, any comments on the Tether fiasco? Previously refrained, but I know you have some opinion on it. Yeah. I'm not a good FA. I'm going to stay away from the fundamental analysis side of things. You know, we had that groovy price divergence for a while. But You know, there's a pretty common train of thought that this is Bitfinex's last hurrah, where they artificially pump up price so they can, you know, solve their debts out of thin air. It's a reasonable explanation. You know, it's just hard to make any money off of it. Christ, 7,000. Who could have predicted this? Who could have predicted an irrational parabolic trend? That's what I want to know. I don't want to talk to the guy. Let's check out TRX BTC on the daily. I'll tell you right now, man, it's in an active downtrend. I was short from 630 sats, but my contract expired at this location, and, well, now it's up 40%. You're still in an active downtrend, man. You know, if you have a downtrend, bet on the downtrend. You can use quad CCI to grab short entries. Honestly, if you just take quad CCI short entries, you're going to be golden. Looks like we got a short-term mean reversion pivot though on the 40 period. Yeah, we're gonna get a flag here from the looks of it, right? Because when we re-enter the 40 band, price will trade laterally as defined by the 40 band, which can actually result in multiple CCI rolls. Specifically, there's no overexpanded mass there. Here's a good example. So you see this little period of mass right here? Right, so when we actually get our CCI roll down here, it takes a longer lateral move before our trend actually resumes. And that's kind of what I'm going to predict here. Where we're going to probably get some high volatility in the compressing range, and then trend continuation. Martin Rovnek, when would you spend left fiat? You're asking when I would re-enter the bullish trend. Oh, Christ, that's a tough question. The only thing I can say is certainly not now. There's absolutely no reason to buy in on the top of this candle. When was the last time we saw something this parabolic? Oops. How did I do that? It's goofy. Okay. You know, we're going to have to define those retracement values as they come. You know, I can't give you a static target, and I can't give you any values. I can give you an overexpansion pivot on the 4 hour. Miraculously enough, we're still respecting volatility overhead somehow. No, it's expanding. It's in a state of expansion. It's just not caught up because of how the parabola. We have a new 140 period though, but that's going to change overnight. There's really no point in defining the pivots, because like by the time I check in 2 hours, they're going to be different. As far as actually trying to identify a new long where to re-enter this trend, we're going to have to wait for the retrace. Right, because I can't define the mean inversion pivots, and then we can't define the retracement values because I don't have the pivots. Okay? So just wait it out. Okay? Okay. I think that's all I have to say today. It's been a good stream. I'll talk to you all tomorrow at 1 p.m. You guys have a beautiful day. Stay cozy.